We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Amir Adnani, CEO of Uranium Energy Corp and Chair of Uranium Royalty. How are you today, Amir?
I'm good, Tom. How are you?
Excellent. Thanks for joining us. So over the last year, we've seen several mine closures in the uranium space. So why hasn't the price had an appreciable reaction?
When you look at the spot uranium price, it really is about 15% of the global transactions in the uranium business. Majority, 80% or greater of the volume transacted is by way of long-term contracts. Long-term contracts basically are entered into by utilities, the end users of uranium, specified volume, specified price, and delivery dates. Utilities really do prefer to buy uranium this way. And so it's, I don't want to say meaningless to talk about the spot price. It is a very key barometer, but the volumes are just not there. If we look at the uranium prices paid on average last year in the US alone by US utilities under long-term contracts from prior years, it averages around $40 per pound. That's obviously much higher than the prevailing $30 spot uranium price. So to bring it back to your question, what we haven't seen yet is we haven't seen a contracting cycle. The previous bull markets in uranium were driven by contracting cycles coupled with other dynamics that were at play, supply disruptions, et cetera. But 2010 is a really good example in the sense that there wasn't a major supply disruption, yet as utilities came into the market, global utilities, Chinese nuclear power companies, and others, and started to contract, we saw the uranium price quickly go from hovering around $40 per pound to about $70 per pound. Now you add a bit of fuel to the fire, you look at the 2006 and 2007 rally, you had a contracting cycle, you added a bit of fuel to the fire with the disruption on the supply side with the flooding of Cigar Lake, and prices found their way all the way over $100 per pound. This time around, we are a decade into what has been a historically long bear market for uranium, and we are starting to see a buildup here from a market rebalancing point of view. Supply side is getting tighter. Producers are getting more disciplined, shutting in mines. Really, the economics of uranium mining and building uranium mines do not work at $30 uranium. But the utilities, you could argue over the last 12 months, operating nuclear power plants and dealing with COVID-related safety issues and realities has been a bigger priority than thinking about procuring uranium, especially when uranium makes up a very small proportion of the overall cost to run a nuclear power plant. I believe once we start to see more activity on the contracting side for larger volumes for uranium, that's when we're going to start to see probably a stronger appreciation in the uranium price.
Amir, as you're talking about this contracting cycle, can you or do you have any sense of where we are in that cycle and when this, let's say, volume could pick up?
It's hard to really kind of, let's say, put dates or a date on it, right? It's I think where we truly are is we're in that zone. We're in that zone whereby you would expect to see that activity start to pick up. It again perhaps has been delayed a bit over the last year with COVID introducing other priorities for power plants. Prior to a year ago, during the Trump administration in the US, there was almost a 3-year period of political uncertainty due to pending decisions around quotas and tariffs that the Trump administration was considering, which would have impacted US utilities. But because US utilities are approximately 25% of global demand, it could have had ripple effects across the whole global market. That kept buying and contracting also at bay, pending to see what the outcome of those trade-related issues were going to be. So we've had really almost a 3 to 4 year period here where there have been other distractions that have perhaps slowed down a kind of a pure play focus by utilities to get on with contracting. So I think, again, we're in that zone. You could argue that the supply-demand fundamentals for uranium today point to the need for higher uranium prices in order to bring the new supplies on that these utilities are going to need. And also, when you look at the uncovered reactor requirements, information that shows how much uranium has not been contracted for by utilities in the coming years, you start to see a major widening gap. And so that, again, signals, while there isn't, you and I can't put a date on it, say, on this day, this is when this so-called contracting cycle begins, we're in the right zone. And we should really start to see increased levels of activity on contracting from here on.
Speaking about the supply side, this is also the first time ever, basically, that there hasn't been any uranium coming out of North America. Is that right?
Cigar Lake, which is a mine in Canada, was just recently restarted again, but that is basically now puts us in North America at one uranium mine operating. When it was shut down on and off over the last year due to COVID, it meant that in North America, to your point, there were no operating uranium mines. And historically, I don't think looking back to the 50-year history of the civilian nuclear power program, you never had a situation like this. North America, US and Canada in particular, have been major producers of uranium for the last 50 years. Canada's always been a significant producer with mines in the Athabasca Basin. The US as a country led the world in uranium mining in the 70s and 80s. And so to find the US and Canada as jurisdictions for uranium mining with such little capacity today in terms of production, but very big potential. This is in a way also part of the opportunity that uranium miners, companies like ourselves see, and I think a lot of investors are probably paying attention to, is where will the next generation of uranium mines that can come online, which jurisdictions are they going to be in?
So why are miners and funds starting to buy fuel, and what is this a sign of, Amir?
You see this initiative be something that my company, Uranium Energy Corp, was definitely a leading player in, right? We recently announced that we were initiating a physical uranium program, right? Looking to buy physical uranium at the prevailing spot uranium price, which is below industry average cost of mining. And the way we looked at it as a company was to say that, hey, look, first and foremost, if we can buy uranium today below the cost of mining it for the industry globally, it's a timely purchase, number one. Number two, it can become a balance sheet asset. When you own physical uranium, it's as good as cash. As a current asset, it's liquid. You can sell the uranium, and as we believe, and if you're an investor in our company, you believe in higher uranium prices, having physical uranium on our balance sheet in addition to cash isn't a bad thing. It bolsters the balance sheet. It gives us also, the third point being, it gives us that strategic inventory that when you're marketing to a utility, and you say to a utility that you're going to start production and deliver pounds of uranium to them, you can accelerate your cash flow if you can sell to that utility from inventory on hand, which is a faster action than restarting a mine. And so it accelerates your cash flow. And finally, in our case, because we're a US company and because we have US-based mines, we see that there could be a premium in the future for US origin production. So one example of US origin is the US government has come up with a program to establish the US uranium reserve. They're going to purchase $1.5 billion worth of uranium over the next decade. Well, if that uranium that the US government wants to purchase ends up commanding a premium, we want to free up our Texas, Wyoming production for that premium pricing. And having inventory gives us the flexibility to use that inventory for other, let's say, sale opportunities or marketing opportunities where there may not be a premium available, but we still want to capture that opportunity. So those were the reasons why we embarked on this. Our company's acquired 2.1 million pounds of physical uranium through contracts we've entered into at an average price of $30 per pound. So that has roughly $60 million market value today. At $50 uranium, which is the level that we want to see the uranium price at before we restart production, the value of our inventory will be about $100 million of mark-to-market value. And so again, you can see where that appreciation comes from. Cash is, holding US dollars is great, which is what we hold, but US dollars isn't going to appreciate that much in value as opposed to the upside value we see in physical uranium itself. And so again, you can see for those reasons we've initiated this. I think other companies that have seen the same opportunity have done that. And this is a very unique phenomenon, Tom. I mean, you cover the mining sector, you cover gold. I'm in the mining business myself. I'm in gold as well as an entrepreneur. I've never seen it in other commodities where you would see developers or miners of, let's say, gold or silver or copper buy their own physical commodity with as much commitment in dollars as has happened recently in the uranium market before production restarts, right? So this would be, let's say, analogous to 2000, let's say, 15, when gold hit at about $1,000 an ounce, right? Remember that? Mm-hmm. Did any gold miners say, you know what, we're just going to go buy gold at $1,000 an ounce because that is well below a lot of global mining costs for gold, and we're just going to store it, right? So I think there's a unique situation developing here. Obviously, there's a limit to how much you can buy because as a mining company, we still want to be very much leveraged and provide our investors with the leverage to the operating margins and revenue that mining uranium is going to create. But with some limit and balance, I think it's a very good strategy, and we'll and it's very unique to what you're seeing in the uranium market today.
Yeah, it's a great point, Amir. Is it possible though that the utilities have learned from the last bull market and they won't let the price get run up like we saw in 2007?
It's very difficult to, let's say, quote unquote, let the price not run up, right? Because at the end of the day, it is a global market, and you will have the good old basics and dynamics of supply demand at play. You will also have the situation that at the end, a utility doesn't have replacement for uranium. If you're a nuclear power plant, you need uranium, and you can't substitute that, let's say, with some other commodity. And finally, it makes up a small percentage of your cost. You really are less concerned about whether you're paying $50 or $100 per pound. You're more concerned about just securing supply. The cost of running or shutting down a nuclear power plant is much greater, i.e. if you run out of uranium, than procuring uranium at, let's say, higher prices. So I just don't see that utilities will be preoccupied with trying to create a cap on the uranium price. It's really availability and security of supply that matters the most. And now more than ever, Tom, I mean, you look at what's happening right now with the movements we hear about on a daily basis about decarbonization, about green energy, about the value that is being placed every day by governments through policy. We're inside the month of April right now. This is Earth Month. Earth Day was last week. All the pledges being made about decarbonization ultimately puts nuclear power and those owners of nuclear power plants in a strong position, because nuclear power is the largest source of emission-free electricity generation. In the US market alone, it is the largest source of power generation that's emission-free. And this will have impacts that I think carry us easily till 2050. I mean, 2050 are the latest, let's say, stated goals that the US has declared to be net zero with their emissions by 2050. Well, nuclear power has to be part of that mix. And we're seeing increasing number of voices from the climate community and climate scientists who recognize that and say, look, we're not going to get there with renewables alone. It's simply a lie to suggest that with renewables, we're going to just get there. And so nuclear power has to play a very important part in that role. And I think, coming back to your question, it will ultimately mean that making sure the uranium is secured to run the baseload clean energy and electricity that nuclear power generates, that will be such a paramount concern that the difference it makes in paying again for that uranium per pound is so insignificant to the bottom line of a nuclear power plant that I don't think that will be the overarching concern.
So Amir, with so much uranium in the Earth's crust, does this sector suffer from some of the same conditions that exist in the gold space, where reserves are falling, or is the supply crunch due to more lengthy development times it takes to bring a project online?
I think just like in the gold sector, just like in any commodity, it's less about, let's say, the availability of any mineral in the Earth's crust. It's more about finding large enough concentrations of it in areas that you can mine, let's say, with availability of infrastructure, and be able to get permits and get sufficient return on capital and investment. All the stars have to align, right? And so I think when you look at that, we definitely do have in the uranium sector areas that are more prospective for higher concentrations of uranium, jurisdictions that demonstrate historically or through exploration that the bigger deposits or more economically viable deposits can be found. But there are additional layers of permitting involved in uranium mining, more so than gold and copper, for example. And so those longer timelines simply mean that it does take longer to bring uranium mines online. As a result, they do require a higher IRR hurdle to justify the CapEx investment. And permitting is tricky. Many countries, so for example, from your coverage of the, let's say, precious metal sector, that there are many junior mining companies active in precious metal and silver exploration and mining in Mexico. In Mexico, there may be prospectivity for uranium, but the mining law doesn't allow the private sector to look for and mine uranium. It is under the control of the state and the federal government. Same in Brazil. Here's another vast country with lots of other commodities that are being mined, but the mining law doesn't allow the development of uranium by the private sector. It's controlled by the federal government. And so there are also these limitations around where you can look for uranium, how you can mine uranium. So while its availability throughout the Earth's crust might be there and prevalent, where you can actually find economically competitive projects that can be under mining law developed by the private sector in advance becomes more limiting. And hence where the opportunities become compelling, where you have jurisdictions where the rule of law and the mining law and the mining code are clearly defined for how you can acquire and develop a uranium mine. And if you have the infrastructure or the human capital to develop in certain jurisdictions, it ends up having more value in a way, because there's a limit to how many jurisdictions in the world truly understand uranium mining from every aspect of what is needed to build and govern a mining industry.
So as you're talking about these, let's say each piece of this puzzle that takes a long time to be able to, let's say, permit the mine or, do any of the research to bring any of these projects to market, how important is it for you to hold this long-term perspective when you're looking at the uranium space and even the gold space to some extent?
From my own experience in uranium, unless you are absolutely long-term, it is almost impossible to be relevant in the industry. I, as an entrepreneur, started in this business 16 years ago as the founder and CEO of Uranium Energy Corp. And in that time frame, even in mining-friendly jurisdictions, areas where there was a clear established mining code for permitting, and we've permitted 3 uranium projects in South Texas, and it still took 5 to 7 years. In Wyoming, which is one of the longest standing states for mining uranium in the US, it's taken over 7 years to permit our Reno Creek project. And so not only does the uranium mining industry require long-term planning and long-term commitment, it also goes hand in hand with the nuclear power industry. Nuclear power industry, the main consumer of the uranium that uranium miners produce, is an absolutely long-term industry. Nuclear power plants can operate upwards of 80 to 100-year operating lives. You look at that, and these are absolutely some of the longest life infrastructure assets or pieces of power generation out there. So it very much is that type of industry, and I think the kind of success that uranium miners can have, it really does need to be underpinned by long-term planning, patience, and the kind of capital that is willing to be long-term, right? Not just contrarian, because the last 10 years has required contrarian investors to be interested in uranium because it's been so out of favor. But you also need to be long-term in addition to that, because look, if you got involved 8 years ago thinking it was contrarian, 8 years later, we're still in a bear market. That is basically a long-term contrarian approach. That tests you in different ways.
Excellent point, Amir. You were also mentioning the nuclear working group before. So the goal of this group was to reinforce the importance of not being dependent on other countries to supply nuclear fuel. So I wanted to get your thoughts on U.S. production and where that might start, and maybe where the considerations are of, let's say, which projects start first.
Well, in the U.S., the study that basically underpins the creation of this U.S. uranium reserve was a culmination of a number of years of studies by various departments, Department of Commerce, Department of Defense, Department of Energy in the U.S., then became a working group commissioned by President Trump out of the White House, the Nuclear Fuel Working Group, and it led to a study that was released last April titled Restoring America's Nuclear Energy Advantage. And the whole premise of this report really has to do with how all facets of the nuclear energy, from uranium mining to the actual reactor technology, an area that the US used to lead the world, that leadership position has been ceded to state-owned companies out of China and Russia. And that there was a long-term national security and energy security imperative to regain the competitive advantage and the leadership that has been lost. And so when it comes to the areas of uranium mining in particular, one way to encourage the development of uranium mines is to really support domestic producers by purchasing uranium from them. And this is historic because in the 16 years that I've been in this business, the Department of Energy was always selling uranium from government stockpiles to pay for various projects that the Department of Energy had. Today, that's changed, and now we're talking about the Department of Energy going from being a seller of uranium to being a buyer of uranium over the next decade with this $1.5 billion program. The program under the U.S. Uranium Reserve is expected to be a competitive bid process. And so you can't, at the end of the day, be a supplier or a miner that is just going to go and basically get a handout. And so this brings me to the answer to your question. What kind of areas, what kind of projects could benefit from this? And it goes back to areas where you have some certainty. So areas in the US that historically have been active for uranium mining are the southwestern US states of Wyoming, Nebraska, Texas, and Colorado and Utah, with some projects in Arizona. Before uranium mining was completely shut down in the US, the most competitive projects in the US were in-situ recovery projects. And where you find in-situ recovery projects are primarily in Wyoming and Texas. Why in-situ recovery is economically competitive over conventional mining is really proven by where global mining in uranium is. The biggest producer in the world, Kazakhstan, uses in-situ recovery. In-situ recovery basically doesn't have all the earth-moving related capital requirements that comes with conventional mining. And so first tier, second tier, cost quartile mines in the world are in-situ recovery mines. And not only is the capital requirement up front low, but the ongoing operating costs are low as well. So with that in mind, I think moving forward, really the next generation of uranium mines that can come into production in the US are going to be in states where there's a history of uranium mining, where the state regulators understand the industry and have the expertise to be able to review permits and issue permits and actually be able to get you to the point where you can get into operations. And finally, to be able to, I think, develop economically competitive projects and economically competitive on a global basis. You can't just rely in the US on the fact that the Department of Energy is going to buy uranium. That's a great boost, but it's not enough. It can't be the only thing. So and my company's thinking and my thinking is really that you have to look at where the global business has shifted over the last decade. Over the last 10 to 15 years, majority of production growth in the world has come from Kazakhstan as a country using in-situ recovery as the method of mining. Today, in-situ recovery is over 40% of global production is by that method. And so taking that basically as fairly good reference point that, hey, this is where globally competitive production could be. The next trick is finding areas where the geology and the geologic setting could be amenable to this type of mining. And again, going into those areas, not reinventing the wheel. We know there's over a 30-year history in the Powder River Basin of Wyoming or the South Texas uranium belt, where the geologic settings are well understood to be amenable to in situ recovery, and really just now requires investment, commitment, and action by companies and entrepreneurs who want to go tackle these. And look, in the 1970s and 80s, there were multimillionaires, and a lot of wealth was created out of companies entering the uranium patch. And I think we're going to have another flurry. We're going to have another uranium bull market, which will take place in the U.S. for the simple reason that supply chains matter. I mean, this is such a big takeaway post-pandemic, post-COVID. You need to have the supply chain of anything that's vital and that you consume. And so you look at nuclear power today in the US, it is responsible for providing the electricity to 1 in every 5 homes. And you're telling me that the uranium needed, which is the starting point of the supply chain to power 1 in 5 homes, that uranium isn't being mined in the US and the entire supply chain is basically overseas. That's not a sustainable picture. One way or other, there will be a reinvigoration of the supply chain for nuclear fuel, starting with uranium mining in the US. And that, I think, will be a huge business opportunity. And many more companies will be created who will look to develop and build that infrastructure to create those supply chains. And it's going to be a long-term business opportunity. It's not going to be a flick of the switch, because you can't build uranium mines. You can't build any mine with a flick of the switch.
It's an interesting point, Amir, that you bring up to think about jurisdiction, not only on a country by country basis, but even a state by state basis. Another thing that you mentioned in there, though, is basically stability. Every 4 to 8 years, we see a change in presidency, and there was a lot of questions around, let's say, Biden's fondness for nuclear energy. So has a lot of that stability or uncertainty around how the Democrats were going to look at nuclear energy, has that been kind of stabilized now?
Yeah, there's definitely a sigh of relief, you can say, because I was, and many of my colleagues in the industry were unsure about how, with the change in administration, where the positions were going to be and where the chips were going to fall. And where it has landed, and what we know clearly now, is that the Democratic Party platform for the first time includes and is supportive of nuclear power. The White House has recently, in their clean energy mandate, welcomed and supported nuclear power. The new U.S. Energy Secretary has very openly in recent interviews spoken about support for existing nuclear power plant in the fleet in the U.S., support for advancing small modular reactors and leading the technology area for those, and the establishment and creation of the U.S. Uranium Reserve to support the development of uranium mining. And so you could certainly say that there's bipartisan support for uranium and nuclear power in the U.S. today. And again, it goes back to the fact that nuclear power has found an important place in the solution for meeting the decarbonization goals that every government now has, and it is really being set everywhere. Because of that positioning, it is really just impossible to ignore nuclear power or refute the fact that it is needed. And we're seeing that. We're seeing that firsthand. Look, I thought it was going to take much longer to see funding out of the Senate and the House for this U.S. Uranium Reserve. It happened so fast. Appropriation, which is the funding for these initiatives, that happened on a bipartisan basis. It happened very fast, and it was great to see. The executive VP of my company, Scott Melby, who's also the president of the Uranium Producers of America, our industry association that represents us in Washington, D.C., gave a Senate testimony recently. The video of that is on our website, where it was incredible to see the kind of support we were getting from both sides of the aisle, interested in understanding the issues around uranium mining and nuclear power, and this very, very bright area around small modular reactors. The US is really leading the way in that. Individuals like Bill Gates are very much behind companies that are advancing the research and the technology. Small modular reactors can do anything and everything from meeting the needs of electricity generation on this planet to powering spaceships who are trying to find their way over to Mars and the moon, et cetera. I mean, and not to mention that micro reactors are how the nuclear navy, how aircraft carriers and submarines are powered. They're powered by micro reactors that run on uranium, and by the way, require US origin uranium based on regulation and rules that are in place for how the fuel for the needs of nuclear navy has to be satisfied.
Amir, as you talk about the the benefits of having this baseload power that is also has zero emissions, what do you think could be the low hanging fruit to help turn more public opinion back positive and seeing it as a favorable way of generating power?
Probably just education and awareness. It probably helps where I saw over the weekend, for example, Fareed Zakaria over at CNN come out and do an excellent piece talking about how misunderstood nuclear power is and talking about the virtues and the positive advantages of nuclear power and making a long pitch about basically how without nuclear power, President Biden is not going to be able to meet the environmental agenda that he has set, and that the public needs to understand the key advantages of nuclear power, and that this is an area that needs to work. Now, hold on, he made some really good points, but I can't remember the last time I saw something like that come out of CNN about nuclear power. And so if you start to see more of the mainstream media take a very sober and honest analysis and perspective on nuclear power, present it all evenly in terms of strengths and weaknesses of every major power source generation. And every major source of power generation has its advantages and disadvantages. And while on nuclear power, everyone focuses immediately on the events at, let's say, Fukushima or 3 Mile Island or Chernobyl, when you put it in perspective and compare those three events and how they were actually managed and maintained from a safety point of view, compared to annual deaths that are related to emissions from carbon-based technology or fuel, deaths related to coal mining and just anything that involves industrial activity or energy generation has so much in terms of give and take, that when you balance it all out and say, look, on balance, what is there to be gained from utilizing nuclear power? We realize that it's actually one of the safest sources of power generation that we have. The spent fuel is completely maintained and contained. It's not just released into the air and the environment. And I think there's just a lot of fear and misperceptions around nuclear power that arguably with time and maybe out of necessity, we're going to become better. We're going to get reacquainted with from a public perception and public opinion forum point of view. And out of necessity, maybe we learn. And when I say necessity is if we want to truly do something about greenhouse gases, and if we want to truly reduce our carbon footprint, then we got to really take a serious look about getting reacquainted and reintroduced to the big advantages that nuclear power offers.
You mentioned the three major events, 3 Mile Island, Chernobyl, and Fukushima, that have really basically put or set the uranium or the nuclear energy industry back as a whole. So shouldn't there be more efforts moving the technology of the industry forward, making it safer and ultimately reclaiming its rightful place in the energy production world?
Yeah, and I think to be fair, though, there's a big time gap between, let's say, when 3 Mile Island and Chernobyl happened to when Fukushima happened 10 years ago. And around the time when Fukushima happened, Fukushima, in a way, was an event that did allow the industry to demonstrate the safety protocols that it has across the world on so many nuclear power plants were tested and showed that it passed those tests reliably. And what do I mean by that? At the end of the day, when you look at the tragedy around Fukushima and the tsunami and the earthquake and tsunami that caused the devastation that came about, much of that was the earthquake and tsunami wiping out populations, killing people, and wiping out infrastructure. There's to this day is not a single recorded death from the actual backup power generations that stopped working at Fukushima that caused the shutdown of that reactor. And so when we, again, put it all in perspective, one of the only infrastructures that was left standing after the earthquake and tsunami hit was that power plant. It wasn't wiped out, unlike much of the other infrastructure that was wiped out. And it was really the impact of the earthquake and tsunami that caused the death and caused many of the issues that took place there. Now, look, at the end of the day, there's criticism for sure that had the owner operator of the power plant acted previous to the events of the tsunami and earthquake to address some of the safety issues that were there, perhaps better locate the power diesel generators that were dislocated because of the earthquake, that maybe it could all have been avoided. And so I think a decade later, much of that has now been studied, much of that has been addressed, much of that means that moving forward, nuclear power plants will be safer. All these events cause so much in terms of safeguards to be introduced and for the industry to improve itself. And no doubt about that all these events, the three events that we touched on, have all been important to help the industry improve, new safety, new protocol, new regulation to come in. And that's something that we can really hang our hat on.
Absolutely, Amir. So in your opinion, what are some of the best ways to play the uranium sector? And how do you think about going about de-risking your investments in this space?
Basically, when you look at the sector, you have some similarities to playing other commodities in the sense that you can invest in companies that own the physical and provide a proxy to the physical, basically a physical ETF. So very similar to the physical gold or silver ETFs that we have. So in the uranium sector, you have Yellowcake PLC that's just listed on the London Stock Exchange, and you have Uranium Participation Corp listed in Canada that basically buy and store physical uranium. So as an investor, when you buy the shares of those companies, you're getting direct exposure to the underlying commodity and the movements in that commodity price. That's one way to invest. And that's one way that most investors familiar with investing in commodities or precious metals will see the parallel that exists in the gold sector as well. Similarly, as we have in the gold sector, there are royalty companies. In the uranium industry, there's one royalty company that's a pure play focused on the uranium sector, and that's Uranium Royalty Corp. That's a company that I'm the chairman of, and Uranium Energy Corp, the company that I'm the CEO of, actually owns 19.5% of Uranium Royalty Corp. Uranium Royalty Corp is your royalty play in the uranium sector. Then you have a handful of producers or companies that were producing and have put their production on standby, such as Uranium Energy Corp. Our production is in the US. You have companies like Cameco with their production in Canada. You have companies like Kazatomprom listed in London with assets in Kazakhstan. And then you have a whole universe of exploration development companies that are developing an asset. You have the likes of NextGen or Fission or Denison, the three Canadian companies in Athabasca Basin who have deposits that are being advanced through exploration, development, and permitting. And so really that's your spectrum, the spectrum in investing from the physical to royalty to the producers and explorers and developers.
Excellent, Amir. Is there anything else you'd like to share with our listeners as we wrap up here?
I think when you look at the uranium sector, it is definitely one of the least followed or understood commodities out there. It is definitely a niche commodity. Do your homework, learn more about it. But once you kind of get into it, you realize it's also not a humongous, too big of an industry to get your arms wrapped around. And so ultimately, it presents a unique opportunity because it is small enough to make it interesting, but big enough that it can really become, the gains can be sizable when the sector starts to move. In 2006, there were maybe 20 uranium companies worldwide. And by the end of the bull market in 2007, there were 600 uranium companies worldwide. I think the market cap combined of the industry went from $10 billion to $150 billion in 2 years. And so there could definitely be incredible opportunity and gains, but you got to be patient. It is a long-term industry, as we talked about already, but it is one that seems to have the stars aligning for it right now. We've had a decade-long bear market, which means the supply-demand side of the equation is starting to look more compelling. Supply simply does not meet demand roughly at 180 million pounds per year, and a supply from mining at about 125 million pounds. Even with above ground inventories, we have a supply deficit over the next 5 to 10 years of 200 to 300 million pounds. And that is enough of a supply deficit to really drive higher uranium prices in the coming years, along with the contracting cycle we talked about, with the very important backdrop of these mega trends of electrification and decarbonization that are driving everything around us, from how we drive to how we live and consume, and the policies that are going to shape much of that. So it's a very fascinating time. It's an interesting time. Hopefully this is a timely interview, look forward to coming back and talking more with you about uranium as we get some big changes and developments in the industry.
Absolutely, Amir, and I want to thank you for coming on to help educate our listeners about uranium and expose them to this space. Of course, we can find more about you at Amir Adnani on Twitter and also uraniumenergy.com. Anywhere else?
That's it. Those are good enough.
Excellent, Amir. Thanks for your time today.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.